Okay, good afternoon, everybody. Andy Petraza here with Special Effects Academy on the starting session for the week of October 14th on the Forex Training Room. We'll jump right in. Welcome aboard. Our usual agenda, the prior week, our currency strength meter, the fundamental announcements, our major pairs analysis, any setups in progress and relevant news, and a few parting words. And right now you're seeing on the screen, let me wait till that actually changes. Okay, we're seeing the long-term ledger. This is where we are. We didn't have any actual trades closed last week, though. On the open, we did get hit with our stop loss on the two first trades there, the pound JPY and the pound Swiss. So those have been exited in the last hour or so. And we have the remaining 5 trades at the bottom are open. They were opened late on Friday. They're meant to capitalize on a few significant events that are happening this week or have indeed happened today, which I'll fill you guys in later as we do the rest of the presentation. That will be updated, obviously, to reflect the 2 closed trades. But other than that, there has been nothing on the long-term account. And on the short term, these are the results on the screen. Callum, are you there? Do you want to walk us through this? Yes, no? Callum going once. Callum going twice. Okay. Then I guess something is wrong with his microphone. We'll just move on from this. It was a flat week. Had some good trading opportunities there, but in general, the market was less volatility than the prior week, definitely, and we'll look at that on the comparative strength when we see that slide. So all in all, a flat week, not a negative, not a positive, very small profit factor there. And that's about all I can say. I was hoping Callum would lead us through some of this, but I think he's having technical issues there in the background. So, notes and opportunities for improvement. Just an aside that I really must take more vacations. This was very enjoyable. And we did have no trades remaining open on the short-term account for the week. And with that, we get to our relative strength meter. As I mentioned in one of the prior slides, the volatility was down this week that just ended. We were a little bit under 2% volatility all in all versus double that in the week immediately prior. Looking at the specific currencies, we can see that the Aussie did not have a bad week at all. It actually appreciated against everybody except its fellow Asian Australian currencies. So that side of the world, the Aussie was not the best currency. But versus the rest of the world, it had a pretty good week, gaining ground on the euro, the pound, the dollar, and the Swiss. The Canadian was the overall loser. Definitely underperformed, everybody else. And by quite a high degree, the deepest volatility we can see was on the Canadian pairs against the JPY and the Aussie. The Swiss was pretty middle of the pack, won some, lost some. The euro, same thing, very middle of the pack. The pound as well. So we had very indifferent results from the European currencies for the week. JPY, the clear winner, it did gain ground against everybody else. Followed immediately by the Kiwi, which gained ground against everybody except the JPY. The dollar was on the bottom. It did give up some ground except against everybody except the Canadian. And on the metals front, we see silver having a pretty bad week and gold having a pretty decent week. So again, a lot of mixed results, no consistent patterns there as regards any trends or anything else for that matter. Fundamental announcements for the week. We do have a pretty busy calendar for the week coming up. Starting on Monday with retail sales out of the U.S. That's not what I normally trade. CPI out of New Zealand. That's going to be a little bit before 6 p.m. Eastern Daylight Time. And the Reserve Bank of Australia's meeting minutes. So Monday, for high impact there as the fundamentals are categorized, but nothing there that I really trade. On Tuesday, we have average earnings coming out of the UK, the core personal consumption out of the US, and more importantly, we have the start of the EU Brexit summit. So this is going to be the fundamental of the week, is these meetings that are being held in the EU to discuss Brexit, obviously with the UK participating. And this is going to be probably the last opportunity the UK has to iron out, to hammer out a deal that, that is decent enough before they get forced into what's being called a hard Brexit, where they simply leave with no clear conditions as to what's going to happen other than they're no longer there. So this is going to color the week, the EU Brexit summit. On Wednesday, we have CPI and CPI coming out of both the UK and the European Central Bank. We have the Fed minutes, which is also a key fundamental. That one will be traded live Wednesday, 2 p.m. And we have, of course, the second day of the EU Brexit summit. And moving on to our second slide on fundamentals, we've got the Australian employment numbers coming out that same evening on Wednesday at 8:30 p.m. Eastern Daylight Time. Not sure if I'm going to be trading the Aussie. Will probably be going to be on the call anyway on our 8 p.m. session, but I'll decide whether it warrants any specific trading when we get closer to that event. And wrapping up the week on Friday, we have retail sales and CPI coming out of Canada. So the key things this week are going to be that Brexit summit, two-day summit, and we're going to have the employment numbers coming out of, employment numbers, the Fed minutes coming out on Wednesday at 2 p.m. Those will be giving us most of the momentum for the week, if any of them does turn out to be something significant. Additionally, and it's not on the calendar, but we did have elections today in Germany. They were regional elections, and as predicted, Angela Merkel's party did not do well. So that is going to probably color the euro for the next couple of days. And they were, in fact, the reason why I opened euro weakness trades on Friday, trying to capitalize on that, which was pretty much a foregone conclusion that the parties aligned with Merkel were not going to fare well today, and they did not. And that is it on that front. We'll move on to our charts. And starting with the euro dollar, we've got, as you can see, we've had a little bit of retracement in the last week from the direction that had already been established. We have been going into dollar strength against the euro, and we did have pretty much a consistent week of it going in the opposite direction. Based again on this election thing I just mentioned, I would expect that trend to reestablish itself and this euro dollar to start heading lower. Pound dollar, this is going to be a key pair to keep an eye on. It did have a nice recovery week, except for that last day when it went in the opposite direction. And indeed, it is not looking good as the week starts out for the pound. So we're still going into that dollar strength as we speak. But you can see that it has established a range. So in effect, we are sideways on the daily until it breaks out of this pattern, going from whatever this high is, 132, I'm going to say 132 something, all the way down to 129. So it's got a range of about 300 pips that it is bouncing across, and we'll see, again, likely there's going to be pound weakness, especially with the uncertainty of the Brexit meetings. So I would expect this to start trending down. And indeed, I think we got taken into our pending order on the pound dollar as well when trading opened for the week. So again, that will be updated when I get a chance to go back to the ledger and make those annotations. USDJPY, we've had a very nice, again, run for the dollar in the past week against a very good run for the JPY. We've had that JPY strength that indeed made it one of the better pairs for the week, and it had a consistent week of trading towards yen strength against the dollar. If we continue having the uncertainty out of Europe, this will probably continue moving in that direction. So our nearest bottom is going to be around the 111 area, which is where we see the shaded area of the Kumo, the Ichimoku cloud. So this 111 is going to be that support as it heads down. If it does have the strength to keep going, especially with events in Europe unfolding, we might have a nice little run towards the bottom. But first, it has to breach that area of support around the 111 to show us that it has the strength to continue going. USD Canadian, again, the CAD has been giving back some of its gains, despite the fact that we did have a good outcome to the Canadian-U.S. Trade negotiations, and that we continue seeing strength in the price of oil, which did backslide a little bit on Friday, but is still at one of its strongest points, the price of oil that it's seen in quite a while. So all things being equal, we should continue seeing CAD strength, which means that this pair should start trending down again. And it may indeed be simply following this trend line that has not been drawn there, but you can see how it would go from the top down. It is pretty much following that, and maybe just on the upswing before it makes another run towards the bottom. So again, too soon to tell. We'll just have to keep an eye on it. On the USD Swiss, it's gone back pretty much to the top. I've been waiting for it to hit the parity level, the 1=1, which seems to be its natural stopping place. It has failed to cooperate by a few tenths of pips. It's gotten pretty close. I do have a pending order to short at that level, but more importantly, because I do think there's more chances of it going down than it going up, I also have a pending order somewhat below, so that I am shorting this pair no matter which direction it moves next. If it does hit the parity, I will short there at the top, but if it never does and it starts heading down again, I will short somewhere around this area of support over here and just short it again on its next trip down. So this one is definitely a waiting game. Again, I don't think there's a whole lot of opportunity for the Swiss to get much weaker than the parity level. So that is where our intentions are going to be for this pair. Aussie dollar, no change. Indeed, no change since the beginning of the year. This is still a very bearish chart, making its way to the bottom as it makes lower and lower lows. Kiwi dollar, the exact same thing, except that the point of weakness really started around April instead of from the beginning of the year. It did have a nice little bit of consolidation for quite a few months until it just joined the Australian honest right towards the bottom. Same thing, until something breaks either one of or both of them out of that pattern, I do expect to continue seeing lower lows consistently until it finds its level or indeed starts a reversal. Aussie Canadian, and you'll see the same pattern in all the Aussie charts. Definitely not a good year for the Aussie. So this has also been making the lower lows, lower lows, lower lows, and indeed I'm waiting for the next iteration of that. Euro Swiss, this has probably been one of the only surprising ones to me, because I wouldn't have expected the Swiss to weaken that much against the euro. They're correlated to a great degree, so it may be simply looking for its prior level. You can see that area of support resistance at the 114.50 that we've had for quite a while. It did drop significantly beneath it and is now trading right at that point once again. So that may be all it was. It overextended and is now back to its natural point of Swiss strength against the euro and will hang out there. At this point, I would expect with any turmoil out of Europe, affecting the euro, of course, because both of these currencies are European, but I would expect another test of the bottom of this chart, but not much more than that. I think that's going to be the inflection point for Swiss strength against the euro. This bottom is going to hold. It will be the initial target, of course. If it does go deeper, excellent if we're in that trade, but we will make this a natural stopping point for the euro Swiss. On the euro pound, we see that strength out of the pound for no good reason at all, but we certainly seen that this one has looked for that bottom, and it had a really stellar couple of days this past week until it decided to give up a little bit of the gains. You can see that the last 3 days of the week, Wednesday, Thursday, Friday, it had a bit of a recovery, the euro against the pound, but nothing compared to the steep drop it's had in the last 2 or 3 weeks. So it's definitely made a new low, very close to this line of support at P87, didn't quite get there. And another one, again, overdue for a correction back towards the top, either towards the line of support resistance at the 89.50, or indeed all the way to the top at the 0.91 up here. This is going to depend in a great deal on what happens in the Brexit meetings that are scheduled for this week in the EU. Euro JPY sideways and is still caught in that sideways pattern. It's now at the top of a recent downward channel that has been following for the better part of this year. We do have a trade on this one going short. It was pretty even the last time I checked, but this was one of the long-term trades that we did open on Friday, looking for that euro weakness to kick off the week based on the German election. So expecting this one to make a trip towards the bottom of the channel. Probably not going to go much deeper than that, but I figured we'd try to catch a couple hundred pips there on that drop if and when it happens. Otherwise, I would expect it to continue sideways or continue following the downward channel, either or. Moving on to the Euro Canadian. And we can see in this one again how the Canadian has lost a little bit of its luster in the last week or so. Again, for no good reason at all. Everything would have pointed to Canadian strength, but it did go in the opposite direction for the entire week, really. Looking again at any significant weakness out of the euro because of the elections would probably be a good pair to short, but we'll see how that starts shaping up as the week begins. Pound JPY, very flat. It's been flat for 3 weeks now, just trading at a new level it established quite a bit above. the prior channel. This is another one that I would expect to plummet and go all the way to its prior levels of support on any negative news coming out of the Brexit negotiations happening this week. So this one will be a key pair to keep an eye on for some very quick gains, if that's the case. And indeed, if the news is positive, then it's going to be in the opposite direction, but we should still see a sharp movement. So trading it either way, but we need to wait until the news cycle actually wakes it up and gives it a direction. Aussie JPY, probably one of the least bearish pairs, bearish Aussie pairs. Not that this isn't bearish. We can see the top it had around the beginning of the year, and from there it has plummeted, but you can see that even though it is going steadily down, it had a very long period of consolidation and indeed is still within that sideways range. So it has pretty much bottomed out, as opposed to the other Aussie pairs that keep making lower lows. This one was sideways for quite a long time. So what that's telling us is that while the Aussie has been weakening, so has the JPY. So we have seen it not have the strength as with the other Aussie pairs to make a deeper. It should be somewhere down here towards the bottom of the screen, not the bottom of the chart, had it followed the same trajectory as the other Aussie pairs. But this one, again, sideways, and that indeed may make this a much better candidate for an Aussie recovery if and when it comes. It has less ground to cover to get it back to its prior range. So obviously that's for the very, very far future, I'm going to say. I don't see anything in the cards that would indicate this is going to happen anytime soon. Euro New Zealand entered a little bit of consolidation this week after making a higher high. So we see that one still following the trend line, still moving towards the top, but it has retraced towards that trend line in the last week. Another key pair to keep an eye on in case this European situation starts going wrong or the Brexit. This is another pair that has a really nice potential towards the bottom on even the slightest euro weakness or Kiwi strength or combination. We have quite a nice little gap there to fill to the next trend line in the series. So another key pair to watch over. Pound Canadian, nothing we haven't seen before. The Canadian giving up some of its gains against every other currency out there. In this case, it was a bad day every single day of the week for the CAD, except for Friday. Friday, it did have a bit of a recovery. But again, not anything deep. It simply retraced to a prior level of support and indeed may go in either direction as the week begins. So we'll have to also see if we get any good opportunities. Again, it's a pound pair. It will be heavily influenced by the Brexit talks, but all things being equal, I would expect this one to break through and even go past the bottom support here in the charts on any bad news from the Brexit front or even just the continuing strength of the CAD, even if nothing else happens. And that is it for the charts. Callum, are you here? Are you able to talk? Do you want to say anything? I tried you before, but I couldn't get you.
Yeah, can you hear me now?
I can indeed.
Yeah, I was having a bit of trouble.
That's okay. Anything you want to add?
Not at this point, no.
Okay.
I've had technical issues all weekend, so I'm still trying to get caught up on what I'm doing.
That's okay. Just making sure. All righty. Then in that case, moving on with our setups in progress, the dollar continues showing strength. Oh, sure, Rick, of course.
It appears as though the pound is open gapped, showing some weakness.
Yes.
Any idea what that's about?
No, there's been nothing major going on. There's been a few political upsets, not really upsets, rather challenges against Theresa May on internal aspects of the UK. Nothing that would affect it internationally, but still, any political turmoil is seen as weakness for the pound. I don't think that explains it totally. I just haven't seen anything else that would even remotely start to give us a hint there. Likely, it's also the uncertainty based on the meetings that are going to be starting on Wednesday for the Brexit negotiations. Again, those have been on the calendar for quite a while, and indeed, that had been increasing the urgency in the last few weeks, with both sides saying, well, we're up against the wall here, we got to make a decision, and none has been forthcoming. So this is going to be the 11th hour. I'm going to say the 59th minute of the 11th hour is what we're going to be seeing this week. So time is running out. Even though Brexit is, there's a hard deadline in March of 2019, if they don't decide something this week, there will not be enough time to implement it. So it will cause a major disruption, I'm going to say, as opposed to an orderly Brexit. We're going to have just a lot more uncertainty. If that happens, it's not going to be pretty. And indeed, as I said, I do expect pound weakness long-term into next year, regardless of what they decide or what happens. They're just going to be discovering new things every day. Even if they iron out an agreement, you'll see that a week later, somebody's going to say, guys, did anybody think about the whaling rights in the Northern Sea? Or, I'm making stuff up here. But there's going to be stuff like that coming out of the woodwork where, oh, wow, we missed that one. And then off we go again.
Okay. I was just curious whether any news was out. It really weakened pretty significantly, but it might recover too.
Yeah, indeed it did. And just let me take a quick peek at the charts, at the live charts, before we move on here. So we see that indeed it gapped, but it stopped. It doesn't seem to be moving much deeper. The euro has definitely weakened, but not in any great fashion. I'm going to guess that the movements, whatever movements we're going to see, are going to happen towards the London Open. It's just a little bit too early. I don't want to be condescending here, but I'm going to say that maybe the Asians don't understand what's going on in Europe that well. So they're not jumping in and out of the market as you would expect based on everything else. Let's take a quick peek here. I'm just going to take a quick look at the pound dollar. Let's see what that's been doing and see how big of a gap we did have. Okay, so we have a gap of about, wasn't that big of a gap either. So it may be a 50 pip gap, if that. Yeah, so at its deepest, it was probably a 60, 70 pip gap, but it has since started moving up. However, the very fact that we had that big of a gap is not looking good for the pound. So we should see continued weakness, or at least uncertainty, where we don't see it moving that much as people wait for the actual meetings to happen. Again, all mere speculation. Don't read too much into it. This is just a nuanced view of the news. It doesn't mean the pound needs to do anything. But we do try to gain some insights into what might happen to better set us up on our trading. So dollar continues showing strength, but again, everybody's saying that the dollar is overextended. The dollar is overextended. One of these days, all of us are going to be right, and we're going to have a nice, significant correction. But for now, the dollar seems to be holding its own. Euro, I mentioned those key elections in Germany today. They were expected to end exactly the way they did, with Merkel's dominance suffering. And, the German government is a pretty key component of the European Union in and of itself. And Merkel is very widely regarded among the Europeans, if not among her German population. So this is going to be, Germany itself is probably happy with the results. I mean, they're the ones that voted. We're seeing the end of Merkel, and she will be replaced in the next election cycle. But for the European Union itself, Merkel is very well regarded. She's considered very good for the EU, which is why I think that we're going to have euro weakness on top of whatever weakness is going to be coming out due to the Brexit issues. So the euro is going to be a key pair to trade for the week. I do expect weakness out of it. Of course, that's simply my expectation. But all the common sense and fundamental analysis would point in that direction. The pound, again, also mentioned key Brexit deliberations scheduled for this week. Got to be careful not to be jumping into those pound trades early. Indeed, if we see some opportunity for a quick gain here or there, we will take it, but probably best to wait till later in the week when we start seeing the outcome of those deliberations. Swiss pairs, continued Swiss weakness, and it is, at least against the dollar, it's getting very near to the top of its range. It may go all the way, but that's less than 100 pips for it to go all the way before turning around again. Either way, I think it's pretty much done what it's going to do, and now we're waiting on the next Swiss franc cycle to begin. Last but not least, the CAD pairs. The CAD giving up a lot of its a lot of gains across most of the pairs. I'm going to say that the CAD is still stronger than it was 2 months ago. That's pretty obvious from the charts, but it is adding a little bit of uncertainty as to whether that's it. You know, the oil is getting stronger, trade agreement signed, and is that it? That's all it's going to go, or indeed, if it does have a breakout still in its pocket that we haven't seen. So I'm still hopeful that it will, that we're going to have a Canadian strength play for a week or two that is going to move it several hundred pips. But if and until that happens, we will just be keeping an eye on it. So that's it. Not the best outlook for the week. There's a lot of uncertainty based on Brexit, based on the elections in Germany, based on a lot of stuff. So there's no clear direction yet. So definitely going to have to wait to see what the charts start telling us. And again, that segues into what I'm trying to say here at the end. We were probably on the brink of entering a very fundamentally driven period. It's going to be whatever is on the news that day. So you guys have to make sure that you're listening to the news and you're keeping abreast of any relevant articles. If you're not willing to do that, then don't trade the pairs that would be affected by things you do know are going to be happening, like Brexit and whatever is going on with the Europeans with their German elections. You can still probably make quite a nice bit of pips out of trading the dollar against the Australasian currencies. For example, you've got dollar JPY, Aussie dollar, and Kiwi dollar. Those alone will probably be safer trades since they're not going to be as affected by everything that's going on in Europe. So just keep that in mind. If you're not willing to invest the time to keep up to date on the news, which doesn't take a whole lot of effort, you may want to give the European currencies a pass this week. Never ignore the technicals. The technicals over the long term are going to be the ones giving you the most bang for your buck. But in a short-term period of fundamental activity, the technicals fly out the window. So just keep that in mind. And as I said, where do you get your news? There's a lot of places you can get it, and there's no right or wrong place to get it. Personally, I like the BBC. That keeps me easily abreast of what's going on everywhere. And I like Bloomberg. Probably listen to about an hour or two of Bloomberg every day, just to see what the talking heads are saying. And I read a lot of newspaper articles, internet articles, and whatnot. But just make sure you have a preferred source of news and that you are keeping your finger on the pulse. And that is going to be it for me. Callum, did you have anything before we go into Q&A?
No, not from me.
Okay. The only other thing is that we are going to have a little bit of a revised schedule, and we're still ironing out the details with Callum. But he will be doing a session a day on the trading room going forward. I'm going to take a little bit of a step back, so I'll still be doing one myself, and we're going to be tag teaming a lot more than we have been so far, as we've gotten rid of some of the other activities that we've got going on in the background that have been sucking up his time and mine as well. We come back to our basics, which are always going to be trading. So we haven't ironed out the schedule. We'll probably have it ready between now and tomorrow. Callum and I will be meeting later today precisely to discuss that. What I can tell you is that there will be no noon session tomorrow, as I have a prior engagement. And then after that, so we'll have our regular 8 p.m. tomorrow. We'll skip the noon. We'll have the 8 p.m. And by then, we'll have a revised schedule as to what we're going to do. That noon session, indeed, may fly out the window and be replaced by something that Callum will be doing in the morning hours in Eastern Daylight Time, which will be his evening. And then segue into my 8 p.m. And perhaps we'll have a London Open session just going forward, since that is a convenient time both for Callum and for myself. But again, all up in the air. We'll be locking that down in the next few hours and publishing a schedule for the week. And that's it for me. Questions from anyone? Okay. Then the only thing I'm going to do, I'm going to stop the recording here. So thank you for joining, but I am going to switch to the charts for 1 second. If you want to hang on, please do.